Most day traders look at Bitcoin bouncing off $65,000 and feel one thing: relief. Finally, the floor is in. The worst is over. Time to buy. That feeling? It's exactly what a bear trap needs you to think for it to work. Before you act on that instinct, consider this. The most devastating crashes in crypto history didn't start with fear. They started with confidence, with charts that looked too obvious to ignore, with retail piling in just as the smart money was quietly slipped out the door. The daily sentiment right now is optimistically bullish, and that's not reassuring. It's a warning sign. In this video, we've pulled apart the current price action piece by piece, and what we found doesn't look like a breakout. It looks like a setup, a bear trap. If you're buying here, you may not be catching the bottom. You may be their sucker, becoming the exit liquidity for someone who planned this months ago. Here's what the data is actually telling us, and why the most dangerous move you can make right now is the obvious one. In today's Bitcoin technical analysis, we break down exactly what's happening. You'll see the higher time frame structure, the key levels that matter right now, what volatility is signaling, and the three scenarios that could play out next. Welcome back to Bitcoin Capital Gold. If you are investing in Bitcoin or gold, knowing when to scale in and when to defend your position is critical. Bitcoin Capital Gold is built for investors who want clear, no-nonsense analysis to make rational, confident decisions. No credible analysis can be done without understanding the higher time frame market structure, because it reveals the path of least resistance by mapping price movements, trends, and the balance between buyers and sellers. On the yearly chart, the last recorded structural swing low was at $15,479 from 21st November 2022. Until that level is broken, the yearly uptrend remains structurally intact. The yearly swing direction is down. On the monthly chart, it also confirms the swing direction as down. The trend is undecided. We do know sellers broke the structural 7th April 2025 low of $74,393. There is a candlestick pattern called a harami, also known as a pregnant woman. The monthly boxes of February and March produced a harami. Now we wait and see if April stays within March high and low to add more weight to the harami and the compression narrative. On the weekly chart, both the trend and swing are clearly down. The last structural weekly high was made on 4th December 2025 at $99,000 and the current structural low at $60,000. A closer test is the high on 17th March at $75,954. Until either of those levels breaks, Bitcoin is working within the dominant range price zone, which we will explain next. We will finish the market structure commentary with the daily chart. We are seeing a pattern of higher highs and higher lows, an uptrend. This is lulling the buyers into the bear trap. Understanding price action is essential because it tells us the story of supply and demand to make decisions based on real-time market sentiment rather than lagging indicators. When we use the expression dominant range, what we are referring to is a collection of one or more bars that contain within it all subsequent bars. The 5th February high at $73,168 and the downside low on 6th February at $60,000 are defining the dominant range. It's also important to record the midpoint of this range, known as the equilibrium point between buyers and sellers, regarded as the midpoint between a tug-of-war battle. This sits at a price of $66,500. Current traded price sits at $66,384, so marginally below that equilibrium price point. We can clearly see buyers have made attempts to break the 5th February high several times, but when you look closely at the closes, price is drawn back into the range, indicating buyers simply don't have the conviction to push it higher. The downside has barely been tested since making the early Feb structural low of $60,000 on 6th February. This low still remains unchallenged. For sellers to take charge again, we must see the daily uptrend broken, and that will be when the 2nd April low of $65,694 is taken out, and further confirmation if it breaks lower than the low on 29th March of $65,025. Fibonacci price zones in analyzing price charts gives us a huge advantage by creating a mathematical framework for understanding market psychology, human herd behavior, and natural market rhythms. On the lower time frames, we are in a tight range. The floor is between $63,348 and $63,714. The ceiling is $69,300 and $69,430. As we write this on Monday, 6th April, Bitcoin buyers have pierced through this high, and we need to see if this closes above this to decide whether to remove this Fibonacci resistance zone. On the higher time frames, we have Fibonacci support. There are two Fibonacci resistance zones holding Bitcoin up. The first higher time frame support is between $64,941 and $65,733. The second higher time frame support is between $57,720 and $58,530. A breaking of these higher time frame support levels can result in a free fall for Bitcoin to under $30,000. When volatility expands, the market is telling us something important. It measures the speed and force behind price moves and gives us a read on market sentiment that pure price direction alone cannot provide. The bottom line is we're seeing compression. The Bitcoin market is treading water. Whilst the daily is trending up, this is so far not a strong trend. This is best illustrated by the weekly range going from 85.66 week 12 to 69.42 week 11 and to 26.29 week 14. Week 15 has just started. Monthly paints the same picture. January 22,222, February 19,344, March 10,929. If we now look at the close to open, weekly is barely moving, monthly also barely moving. We have indecision and compression. Whichever way the next move is going to go, it's going to be big. Compression like this cannot last. An explosive move is coming. No market moves in isolation. By layering in the macro backdrop, we add a wider lens to our analysis, one that reveals how connected markets are influencing the picture and what that means for future price action. Crude oil has safely moved away from $100 and is pushing higher. As Iran tensions escalate, prices are expected to go higher until there is de-escalation. The US dollar index is navigating the $100 zone, pushing above and below it. Currently, it trades below at $99.81. Equities is in a downswing, but is trying to maintain a rally. The Nasdaq reached a low a few days ago at $22,961, but bounced yesterday to $24,000. For now, $24,000 is the battleground, and the Nasdaq is currently trading marginally above this at $24,360. Gold is currently rallying, but there is overhead resistance at $4,000. We do not feel the rally is strong. Finally, the USD JPY, which is at a pivotal level at $160. Japan's fiscal policy could have a major impact on financial markets. We have looked at market structure, price action and price zones, volatility, and correlated markets. Now we visualize how markets could play out. Scenario 1. Buyers push higher. For buyers, anything above $71,000 is in danger territory, as it can easily snap back at any time. $76,000 is a level which is a pivotal level for buyers. If we get to these levels, we will review. Scenario 2. Range continuation. Compression shown by our volatility measurements is the theme on Bitcoin, and it continues to be trapped in a tight range. Will April break out? Let's see. Scenario 3. Support failure. The Fibonacci support zone between $63,000 and $64,000 would need to be first tested for sellers to get back into this game. If it can do this, then the structural low of $60,000, held for nearly 2 months, is in sight. Let's bring this all together so we are clear on market structure, which price zones we should be focusing on, volatility, and how markets could play out this week. Key takeaways. Bitcoin is sitting right on its equilibrium point at $66,500, the midpoint of the dominant range established in early February between $60,000 and $73,168. On the surface, the daily chart looks constructive, printing higher highs and higher lows, but the higher time frames tell a different story. The yearly, monthly, and weekly swing directions are all down. Buyers have repeatedly attempted to break above the February high and failed on every occasion, with price being drawn back into the range on each close. The monthly chart is forming a harami pattern, a compression signal, and the weekly range has collapsed from $8,500 to $2,600 in 3 weeks. The market is not building momentum, it is compressing. That compression has a direction of least resistance, and right now it points down. The daily uptrend is luring buyers into a potential bear trap. For sellers to take control, the first confirmation comes when the second April low of $65,694 is broken, followed by the 29th March low of $65,025. If sellers can achieve this, it opens the path towards $60,000, and a break of $60,000 risks a free fall toward the second Fibonacci support between $57,500, with sub-$30,000 territory a real possibility beyond that. An explosive move is coming. The volatility data makes that clear. The only question is which direction it resolves. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.